Ladies and gentlemen, welcome to the Crystal Ball of Chaos edition of Canadian Real Estate Insights for 2025. I'm Vince Gaetano of the Wise Old Owl Show, and I'm here to decode what's ahead for one of the most dynamic real estate markets in the world. But first, let's acknowledge that the only thing more volatile than the Canadian real estate market is Elon Musk's X account, blown up Cybertruck, and all. We're not just going to wade into the shallow end of speculation. We're diving headfirst into four massive policy shifts poised to reshape the Canadian market. Bank of Canada rate cuts, immigration policy tweaks, relaxation of the mortgage rules, and political upheavals, both here and south of the border. Buckle up. This ride's got more twists than a season of Succession. Let's start with our favorite banker, Tiff Macklem. After holding rates high to curb inflation in the first half of last year, the Bank of Canada had a string of 5 straight cuts, and there are more cuts to come in the first part of 2025. This is essentially caffeine for the real estate market. Why? Lower rates reduce borrowing costs, making it cheaper to finance homes. Expect a surge in demand as buyers sidelined for years flood back into the market. Picture a Boxing Day sale at Yorkdale, except the bargains are bidding wars. But before you pop the champagne, consider the flip side. Rate cuts can reignite inflationary pressures, especially in an undersupplied housing market like the GTA. The problem isn't demand, it's supply. Lower rates will spike prices, making affordability even worse. Congratulations, Toronto. Your $1 million townhouse is now a $1.4 million fixer-upper. But the key to all this will be employment security. If folks are laid off or have no confidence in their employment, big-ticket items will not be purchased. We will need to keep an eye on unemployment, as this will be the key driver to the real estate market picking up in 2025. The federal government plans to cut permanent resident targets by 20% to 395,000 annually and reduce temporary residents from 7% down to 5% of the total population over the next 3 years. With a ballpark estimate of 40 million people in Canada, 2% decrease is 800,000 permanent residents in 3 years. Pearson's departure terminal will be busy. For the GTA's real estate market, this is like taking fuel out of a Formula One car. Immigration has been the lifeblood of housing demand the last few years. Fewer newcomers means fewer renters, fewer buyers, and less upward pressure on housing prices. The condo market, already oversupplied, will take a huge hit as fewer tenants mean higher vacancy rates. Don't underestimate the unintended consequences. Immigration cuts might ease demand for housing, but they'll also tighten the labor market, driving up construction costs and slowing new housing projects, and potentially freezing projects altogether. So even as demand tapers, supply stagnates, because why solve one problem when you can create two? Let's talk mortgages. The federal government is extending amortization periods from 25 years to 30 years and increasing the high ratio insurance cap to $1.5 million from $1 million. Translation: buyers can borrow more and stretch payments over longer periods. This is a double-edged sword. On one hand, it gives buyers a fighting chance in the GTA's overpriced market. On the other hand, it's like handing out candy at a Weight Watchers meeting. I'm not a big fan of borrowing more. These changes will inflate prices further because increased buying power always leads to, wait for it, higher bids. My concern will be those homes in the $1 million range could see excess demand and inflate prices to 1.2, 1.3 million because the lifting of the higher ratio cap. Expect more first-time buyers chasing the dream of home ownership, but also a deeper divide between those who make it and those who are going to be priced out forever. Mortgage rule changes may create the illusion of affordability, but remember, stretching payments doesn't make homes cheaper. It just makes debt last longer. It's the financial equivalent of slow-cooked regret. Finally, let's address the political tectonic plates. On January 20th, the U.S. gets a new president, the familiar Donald Trump. While Canada will see a federal election later in the year, as polling trends indicate a new prime minister on the horizon, A Trump administration is a wild card for Canada. His trade policies and threat of tariffs could hit Canadian exports, leading to economic ripples that affect jobs, wages, and ultimately housing demand. If tariffs go up, the cost of everything from lumber to labor goes up, putting more strain on home builders and buyers. Our dollar, already suffering, is dropped below 70 cents, making imports more expensive. Meanwhile, a potential change in Ottawa could usher in policies aimed at boosting affordability or not. The real wild card isn't who's in power, but whether any government has the courage to tackle systemic issues like zoning laws, development timelines, and the dreaded bureaucracy and red tape that adds to time and costs. So far, governments have been better at blaming the weather than adding more roofs to house Canadians. So where does this leave us? The Canadian real estate market is staring down a cocktail of rate cuts, immigration slowdowns, mortgage rule changes, and political uncertainty. If you're a buyer, you're hoping for a soft landing. If you're a seller, you're praying for a bidding war. And if you're an investor, you're busy Googling how to hedge chaos. The key takeaway here, be cautious but proactive. Rate cuts will drive short-term gain, but structural issues like supply constraints and affordability aren't going anywhere. Immigration cuts may temper demand, but they won't collapse the market. Mortgage rule changes will help buyers get in, but they'll also push prices up. And the political landscape, it's a wild card that could either stabilize or destabilize everything. In the end, the real estate market is like that high maintenance friend we all have, volatile, demanding, and yet somehow irresistible. It's not for the faint of heart, but for those who play the game smart, the rewards can be immense. So whether you're buying, selling, or just watching from the sidelines, stay informed, stay strategic, and remember, at OwlMortgage.ca, we're here to help you navigate these uncertain waters with facts, insights, and maybe a little bit of wit. Our goal is to guide you and help you build your wealth. If you found this breakdown helpful, don't forget to hit the like button, subscribe, and share this video with anyone trying to make sense of this market madness. Most importantly, drop a comment below to share your thoughts and let us know what you think about the future of the GTA real estate market. Let's keep the conversation going because silence, much like stagnation, is not an option. Cheers.